first of all, sir, thank you so much for accepting our invite and coming on our podcast. This is amazing. I've been following you for a while. I've seen your tweets. I've learned from you, and I can honestly say you are one of the So there are a lot of Indian finance Twitter is full of a lot of people, but you are one of the very genuine handles out there. So thank you so much for sharing your wealth of knowledge
Thank
with
you
us,
very
sir.
much for having me, and thanks for giving me the opportunity. Thanks for your kind words and appreciation.
The opportunity is all ours, sir. It's going to be great learning from you. So, sir, before we talk about you and learnings about you, let's maybe we can have a quick survey of the market. आज का दिन तो ठीक ठाक था, काफी cold जा रहा था. In fact, हम लोग ऑफिस में बैठे हुए थे and somebody said कि यार क्या है ये, कुछ मजा ही नहीं आ रहा है, क्या बोर मार रहा है. And then suddenly उसी समय मार्केट ऐसे पलट के जो हुआ है market mein, that was something else. So how was what's your thought on the market right now, sir?
Actually, if you see, the index has gone up without participation from the broader market. So, in fact, most of the traders or investors you meet, their portfolio, most of the portfolios are still having drawdown issues here, and the Nifty is sitting at 18,400 odd levels. But the broader space, the small cap and the mid cap, has not yet participated in this rally. So I'm not a keen follower of the index level. If you have seen my tweets, if your trades are working, then it is good to go. Otherwise, it's good to sit out and wait on the sidelines, protect your capital. So, to me, I'm like holding 7 positions now. 2 are in short positions and 5 are my long positions. So I'm pretty much not comfortable with in the market as of now at this level, because there are not many setups I'm finding to go long in. So it's a very cautious approach right now.
Right, right, perfect, sir. So that with that roundup, that kind of gives me so this is going to be a very casual chit chat session, sir. मेरे दिमाग में अजीब अजीब क्वेश्चंस आते रहेंगे और मैं आपसे पूछता रहूंगा. तो फर्स्ट क्वेश्चन इज नॉट दैट अजीब, बट आपका सो आपने बोला कि आपकी 2 शॉर्ट पोजीशंस हैं एंड 5 आर ओपन लॉन्ग पोजीशंस. सो इसमें 2 चीजें मेरे को पूछनी है. वन इज फॉर यू, हाउ मच ऑफ इट इज इक्विटी एंड हाउ मच ऑफ इट इज ऑप्शंस एंड फ्यूचर्स, एफएनओ में कितना आप बिलीव करते हो. एंड सेकंड इसी से रिलेटेड इज कि एज अ लॉन्ग टर्म में एक बहुत बड़ी डिबेट रहती है कि लॉन्ग टर्म वेल्थ इज इन जस्ट इन इक्विटी एंड नॉट इन, मतलब ट्रेडिंग में मजा है, थ्रिल है, बट नहीं है. सो उस पे आपका क्या अप्रोच है? दोनों रिलेटेड क्वेश्चंस.
Firstly, my short positions are definitely in futures, because I'm not trading in options as of now, and all long positions are in cash segment. So 5 longs are in cash and 2 shorts are in futures. And regarding, your second question is related to long-term wealth creation through equities or through trading per se.
Yes,
So,
sir.
see, I have time and again mentioned that it is a myth that you can't build long-term wealth through trading. In fact, most of the ace investors in India have made their wealth initially through trading, and later on they jumped into the investment arena. So what happens in this case is that it's pure mathematics. Pure mathematics. Basically, if your stock selection is good, if your entries are good, so, and by what do I mean by entries are good is that your stop loss is very tight. You can build on a bigger position size, and with that position size, you rotate your capital faster, churn your capital faster, and this way you can compound your capital much faster. I'm not talking about 10 to 12 or 14% return. So with trading also you can build long-term wealth. It's a myth that basically what happens that during the market tops, when you are very near to the market top, it is trading with the strict stop loss, which will prevent your capital from drawdown in case of a bear market or a crash or a correction. So you will be sitting out with the cash waiting for ample opportunities. And one myth is that the old leaders will be the new, 5x or 6x kind of candidates. And I think the market has seen right now. I was saying in 2020 also that new leaders will emerge, and they were like Loris Lab, Dixon, Tanla, Tata Elxsi. They were the new leaders. Now, when they are sleeping, now you get a new set of new leaders again. So with every market cycle, you can ride onto them, identify them only when you protect your capital. So you shouldn't have a drawdown of, I think, not more than 5 to 10% in any kind of market cycle. So only when you can protect your capital, then you can churn up quickly and compound your wealth. So both from the long term side perspective also, I mean, these days investors have now literally realized that getting out from the stocks at key points is equally important. It's not just buy and hold kind of philosophy that is working right now.
राइट राइट परफेक्ट सर सर एक और चीज़ जो बहुत इंटरेस्टिंग मेरे को आपने सिंस यू इनिशिएट द टॉपिक ऑफ गेटिंग आउट एट की पोजीशंस इन एवरीथिंग सो सेक्टर्स में भी इस समय काफ़ी कुछ ऐसा इंटरेस्टिंग हो रहा है दो सेक्टर्स स्पेशली ऐसे जो मेरे को लग रहे हैं वन इज आईटी तो ऑफ कोर्स मैं जानना चाहूँगा व्हाट इज योर व्यू ऑन इट बिकॉज ग्लोबली फैंग इज इन ट्रबल एंड ऑफ कोर्स हमारा भी आईटी खास नहीं कर रहा है कुछ टाइम पहले लोग कह रहे थे बॉटम आउट हो गया है एंड ऑल but uska and second is the new age companies something very interesting has happened in the past few days uh, be it policy bazaar be it Nykaa be it paytm आज का काफी कुछ इंटरेस्टिंग हो रहा है जो न्यू एज हमारे आईपीओ कंपनीज से जो यूनिकॉर्न्स से सो इन दोनों चीजों पे आपका सर व्यू जानना
See,
चाहूंगा
firstly, it is a futile exercise to catch the market tops and bottoms. I mean, only liars can catch the exact market bottom. So, for that, in our technical analysis, we have multiple tools where we can go very near to the bottom or very near to the top. But investors or traders generally miss the whole idea that the maximum money is made between that period when the trend reverses from downwards to upwards and from upward to downward. So I am talking about a chart where a stock is going down, it turns sideways, and now it starts moving up. So you do not have to catch everything right at the bottom, right near the bottom. You can capture the middle piece of that broader trend playing out, and you can still capture huge amount of wealth in that portion. I mean, I hope you are getting my point because I can't share my screen in here. So that's the main concept of catching the maximum portion of the trend. In fact, if you pick any technical analysis book, the first line is always that the aim in the TA is to identify the trend as early as possible and exit it at the first sign of the trend reversal. So that thing. Now, second thing is that you talked about new age companies. So there is a book written by Maniacs, Panics and Crashes by Charles Kindleberger. He was a Nobel laureate, Nobel Prize winner. So in that book, he discussed the 5 stages of bubble creation. So in your first stage, like first or second or third or fourth, I am directly jumping to the fourth and fifth stage. They were the clear signs of market very near to the top because in this in these late stages, these new age companies or these IPOs or these promoters become greedy and they come up with their IPOs at the crazy or the insane valuation. So same was the case with Paytm or Policy Bazaar or Nykaa or so many companies. So you'll see now you are watching the drawdown of more than 50% in all these names. There was a time when IPOs like DMart were coming at fair valuation, but now these new age companies were nothing but a trap and an easy exit for the promoters to get out and encash and cash their holdings, right?
Right. Another very interesting thing happened with, especially with Nykaa sir. So Nykaa as a concept, I always like the company. So मैंने tracking quantities में थोड़ा सा लिया हुआ था. So I had 3 or 4 stocks of Nykaa in my portfolio. And so इनका जो lock-in period था, that actually ended on Friday, I think, कुछ Thursday or Friday को, Nykaa में, promoters का. And same day they issued bonus shares 5:1 ratio में. They didn't issue a split. They issued bonus shares which take like 2 to 3 days to deliver. So what happened on Friday was, मतलब this has been such a smart move that वो शेयर्स मेरे अकाउंट में आ ही नहीं रहे हैं और उधर पूरा उनका लॉक इन खत्म हो गया है. अभी भी वो पूरी तरीके से मेरा प्राइस एंजल वन पे रिफ्लेक्ट नहीं कर रहा है. आई मीन कि मेरा ओरिजिनल बाइंग प्राइस कल तक मेरे पास थे नहीं और उधर पूरा इंस्टीट्यूशंस को सब आराम से उधर चल रहा है. तो इट वाज अ वेरी इंटरेस्टिंग गेम दैट वाज प्लेड.
Correct, sir. Basically, I mean, you bought only little quantity, three or four. For someone buying 100, 500,000 share, it was never a buy because it's in a clear downtrend. Policy Bazaar, Nykaa, then many new age companies you were taking the name of, they were never a buy. They never generated a buy signal. So these things, I mean, be ready for surprises if you are holding stocks in downtrend, because in an uptrend, I mean, if the price is going up with huge volume pump in there, that means some big hands or institutions are interested there. So at least the probability of a sudden down move or a sudden surprise is very minimal.
राइट, एब्सोल्युटली एब्सोल्युटली। सर, ये तो हम लोग का थोड़ा थोड़ा मार्केट्स का डिस्कशन था, बट मे बी कैन वी हैव सम लाइट, आई एम श्योर हम लोग सब लोग आपके फैंस हैं, काफी टाइम से फॉलो कर रहे हैं, बट कुछ लोग होंगे जो मे बी आर हियर फॉर द फर्स्ट टाइम। थोड़ा सा आपकी स्ट्रैटेजी के बारे में, आपकी ट्रेडिंग स्ट्रैटेजी के बारे में, कैसे आप क्या ट्रैक करते हो, एंड हाउ डू यू नो मेक मनी इन द
So
मार्केट?
my strategy is basically based on relative strength as the parameter. You send me to any country, I will pick up the relatively stronger stocks which are beating the benchmark for the past 3 month period, and they are in an uptrend. So there in those stocks, I look for the entry points. If the stock is not buyable the next day, I will not even look at the chart. I will keep that in the peripheral watch list. I always have a core watch list and a peripheral watch list, and one is the actionable list. So in actionable, so first I will scan the market. I will scan for relatively stronger stocks, some IPO names, some gap up names, and the stocks making highs. Some 4 or 5 scans I will run, and I will scan. I am telling you roughly about 100 to 150 charts are common in some multiple scans. So I scan them. Now, not all of them are buyable the next day. By what do I mean by buyable is that the consolidation is very tight. I can build on a big position size with a tight stop loss in those names as they passes through the buyable points, and that is how, I mean, I churn my capital with big position size in them. So the ideal holding period is usually 10 to 15 or maybe maximum 20 days, because or in a healthy market, what I can do is that I can lock in some half gains and will freely hold the rest of the position. So the style is swing trading to in sometimes in the freely held shares you can say it's positional trading. Like I shared one trade of Adani Enterprises where I took quick gains on the half position and half I was trailing freely. So this is my strategy, sir.
राइट सर, एक और बहुत इंटरेस्टिंग चीज विच आई थिंक आई नोटिस इन द बिगिनिंग ऑफ दिस पॉडकास्ट, आपने कहा कि आपकी 5 लॉन्ग पोजीशंस एंड 2 शॉर्ट है, विच मींस यू हैव अ काइंड ऑफ अ कंसोलिडेटेड पोर्टफोलियो, जो एक शार्प
Hmm.
पोर्टफोलियो है. So I would love to hear your thoughts on there is another aspect of diversification versus consolidation wala. So your thoughts on it, one. So
Actually,
first
sir,
this.
it depends on individual to individual. I personally cannot track more than 7 to 8 positions in the portfolio. If the moment I cross 10, I feel disturbed and I cannot handle more than 10. Some people can handle 15 to 20 positions. So it depends. With my experience, I can say that it is very easy to track your portfolio if you are holding 6 to 8 to maximum 10 names. But I have seen people holding 30, 40 names. I mean, in 30, 40 names, your biggest position size would be, I think, around 3 or 4% or maximum 5%. So even if that 5% position becomes double, your portfolio moves by 5%. For instance, like one of my friend was holding Tata Elxsi, moved up 10 times, but the position size was only 2% in the portfolio. So it moved the portfolio by 18% overall, despite catching a 10 bagger. So concentrated and diversified. Now, if you are asking specifically about the short and the long diversification, then I have just created these short positions because market is already, I mean, that's what I'm saying. Nifty is moving up. It has rallied up from 17,000 or the much lower level till here 18,400 without the broader market participation. And whenever there is a strong move in certain sectors, like it is the favorite of most of the traders or participants, what happens usually, the weaker stocks also rally back up to their key moving averages, but they are still in the downtrend. So they provide you ample opportunity to short them. So that is why I created these two short positions just recently. Otherwise, I was not holding any short position for past, I think, 1 month or so. So diversification of long vis-a-vis short position is very new here. You can play that if your capital allows you to go short in futures or options. Otherwise, uh, diversification based on number of stocks is a individual perspective, but I think not more than 15 or 16 stocks, because then you lose track of all of them, and also your position size goes very low in each of the position, or maybe the highest performing position, and your portfolio performance drastically goes down.
Right, perfect, sir. So, sir, the I think the proponents of diversification strategy are those, मतलब इसका main जो दिया जाता है reasoning, that is कि risk manage हो जाता है. So I would love to know कि since of course consolidated portfolio gives high returns, so there is a high risk also. So how do you do your risk management, sir?
Risk management is, sir, because see, I mean, this is not for everyone, like, because you cannot devote your time entirely glued to the screen. But even if you are not glued to the screen, what happens usually, let's say I'm building a position of 15% in a single stock. When the stock starts moving up from my buy point, now let's say that 15% size moves up 15%, 20%, which is very common in a healthy market. In a healthy market, I'm saying, let's say it moves up 10%, I may trim 5% of my position and lock in some gain, so that the position now comes back to the normal size of 10%. At least I have booked some gain. I will bring my stop loss to the break even point, and then I will ride that trend for a longer period of time. So 8 positions, 7 positions, I mean, it's still manageable, because your position size will be 10 to 15% in single share. Now, this is what I learned from many legends. Many legends now, everybody has their own style. Like Sir Mark Minervini will start buying all the position as a single point. Sir David Ryan will start with 10% position. Everybody has their own style. What I found is that I buy my full position when there is a buy point, and if the stock moves up 10-15% from my buy point, I will lock in some gains, and then I'm freely holding, because at least now I know that it is much away from my buy point. So I will bring my stop loss to the break even point. So unless the stock gaps down 20%, maybe, I mean, it's very, very rare. Only I think in one time near 4100, 4300, I got a little bit stuck in Balaji Amines. Otherwise, I didn't face any problem where the stock gapped down immediately. Recently, one trade was Anantaraj, when there was a fluke trade in there. So, I mean, it was just for a 1 second blip that pushed me out from the trade. Otherwise, it never happened that the stock will gap down if you are buying good stocks in a quality stocks in enough trend. And obviously, they should be liquid names if you are playing with big position size.
Right, right. So, sir, आप इसमें ये सब भी देखते हो क्या थोड़ा बहुत, like how much of fundamentals do you track? Of course, कुछ आप क्या at least market cap do you see, and कि small cap है, mid cap है, or is it just volumes that determine?
Sir, actually, first point, I will always check the technical setup. So you can say 90-95% of the decision is made by the technical setup. Now I will come to the fundamental part, whether the company has basic earnings. I mean, I will look at the sector, so as to understand which sector is the name coming from. Then I will also look at the market capitalization, because if, like, I posted a trade of ITC on Twitter when I bought at 271, so stop loss was 265. Now what happens in this trade, I can build on a big size because the market capitalization is very high. If I make a very small size position in ITC, then the stock moves up maybe 10%, because at that point of time we were in a hang that ITC will not move at a faster pace, which fortunately it did so after 271. So if it is a high market capitalization company, I will build on a big position size comfortably. But if it is a 1000 CR or maybe 500 CR MCAP company, I will go slow. I will maybe add half positions, and if it starts performing, then I will add another half. So pyramiding up. So I check market capitalization. I check the sector, because also if the sector is very weak, then I will skip that company. I will look for some other name in a very strong sector. So sector gets the priority. Basic earnings or basic margin figures, or what the company is actually doing, whether they have any new product or new services or something like that. I visit the website of the company and then I see some, but not always, not always. To be very honest, sometimes I don't get time to track fundamental. So I place the trade without even knowing what the company does. Most of the time I have taken the trade like that also.
राइट राइट परफेक्ट सर। सर एक इंटरेस्टिंग थॉट इससे मुझे ये भी आया, सो यू सेड कि आप सेक्टर में भी थोड़ा बहुत देखते हो, सो समटाइम्स व्हाट हैपेंस इज कि कुछ पूरा सेक्टर ही चल रहा होता है। फॉर इंस्टेंस थोड़े टाइम पहले ऑटोमोबाइल्स एंड ऑटोमोबाइल एंसिलरीज चल रहा था, फॉर अ गुड रन चल रहा था, अभी भी लोगों ने होल्ड किया हुआ है। एंड देन केम, अभी शुगर का सीजन आता जाता रहता है, इट्स अ cyclical stock, every 2 months I hear कि sugar stocks are gonna go to 80h and then they come back again, but the point being कि do you, like for instance अगर कोई sector चल रहा है, so do you buy, since you have a consolidated portfolio, do you buy multiple stocks of the same sector at that point, या फिर you try to keep it diversified
See,
sector wise?
actually, when I was analyzing auto sector in February, I posted on Twitter also. There were roughly about 180 to 190 charts. So when I analyze them, I always love to see stocks which are very near to their highs, within 15, 20% or just near to the highs. So only 9 stocks out of those 180 or 190 names qualified. They were Rolex rings, then TVS Motor, so Mahindra and Mahindra, they were the names that qualified. So now, as an individual, you have the option. You can buy maybe a basket of 5 to 6 names. If you are not good at stock picking, then I will recommend you buy the complete ETF of the sector. If you are good at it, maybe see, auto sector was very simple because in two-wheeler segment you have just few companies like the TVS, Bajaj Auto, or Hero Moto. Out of these three, the choice was obviously TVS Motor at 700 level because other two were sleeping down near their 200 MA. Now you see in the four-wheeler segment, Maruti, which has not even crossed the 10,000 level till now, so not anywhere near the high. It was, I think, around 7,000 or 7,500 odd level. So once you see a sector is performing and getting some money in, then you can scan all the charts and look for the companies which are very near to the highs because they will have less overhead supply. So the company, if you buy at the bottom, see, it can also perform, but you never know like what will the overhead supply do because there are trapped buyers sitting in it. So you see now Atul Auto now performing when all the auto sector companies have taken the lead. Now there are some stocks that are coming from the down. So when I look at the sector, I look for relatively stronger names, and those are near to the highs, and that's where my interest is in.
राइट राइट परफेक्ट सर। इनफैक्ट सर इसी से रिलेटेड एक क्वेश्चन भी हम लोग की ऑडियंस इस पॉडकास्ट में पोस्ट करती जा रही है। ऑडियंस, इफ यू हैव एनी, सम पीपल हैव ऑलरेडी पोस्टेड, अदर्स इफ यू हैव क्वेश्चंस प्लीज डू पोस्ट देम, वी विल ट्राई टू टेक अप अ फ्यू क्वेश्चंस एज वेल। सर जनार्दन आर सर ने क्वेश्चन पूछा था, सो इफ यू कैन हाईलाइट सम मोर डिटेल्स ऑन इट। हाउ इज योर स्टॉक सिलेक्शन हैपनिंग फॉर स्विंग ट्रेड्स, फॉर इंस्टेंस लाइक इफ यू डू 52 वीक हाई और रेजिस्टेंस ब्रेकआउट, so already आपने बोला कि you look for like all time high से थोड़ा सा नीचे हो, but can you shed some more light on it कि what setup is it exactly that is your favorite?
My setup is like I can share examples for you. I don't like to buy stocks near 52-week high. If I am buying 10 stocks, I think one or two maybe 52-week highs, rest 7 or 8 are much below that obvious high which public can see, which people can see. So if you check the chart of Ambuja Cements where I am taking entry 525, ITC at 271, Adani Enterprises at 3330, you will get a fair bit of idea where I'm buying. It's basically below the highs, but the broader stock, the stock is in a broader uptrend and it is consolidating nicely, going in the right direction. See, all the stocks that are very strong, that are in uptrend, when they relax, like it's like a running train. When the train is parked at the platform, when the stock is consolidating, either it will be consolidating horizontally or diagonally sloping down. If it is diagonally sloping up, there is no entry point in that. Diagonally sloping down or horizontal boundary, it will provide you. Now, here is my interest. Now, those stocks that are consolidating on the chart and in a broader uptrend, I mean, broader uptrend means 200 MA sloping up, there is my maximum interest. Because in those stocks, if you enter, you can make money in less time. There is no point of buying beaten down names and waiting for 2, 3, 4 years when you can make money in the stocks that are already in an uptrend. So near to the highs, I mean 15, 20%, and above your key moving averages, and beating the benchmark index Nifty 50 in the past, if you compare for the past 3 months. So that is the broad universe, and I can tell you If I run this scan today, there will be I think around 150 to 180 names that will fulfill this criteria. So that is my focus list. So in that, I will be looking for which one is easily viable, because I can tell you today also, Tanfac Industries will pass the scan, but it is not viable because it has gone up almost 20-25% in 3 days. So it is not viable, but it is still in the list. So I will keep that in the peripheral watch list, and the main core watch list will comprise of those stocks that are giving me some opportunities to enter.
Right, right. Perfect, sir. सर इसी से रिलेटेड एक और क्वेश्चन आया है Jignesh sir ka, since you said relative strength is also something that you look for, what duration, like 21 days, 50 days, do you use to filter stocks? Also, do you generally look at weekly chart or daily chart, or what is the general time frame that you look for? And third, मैं इसमें add on करना चाहता हूँ, what is your average holding period like? Like I get impatient अगर मैंने कुछ लिया and then it goes flat for a while. So do you get impatient with your stocks या फिर you give them time?
So, firstly, relative strength I scan for 3 months basically, 3 months performance as compared to the benchmark Nifty. Because if the period is very low, then it might be possible that your stock has run up in the past 20 days because of some news. It made a circuit, 20% upper circuit. It will pass your scan, but the stock is not good. So 3 months is comparatively fair time, because more than 3 months, 6, 9, 12 months, you are losing on the initial few move. I mean, initial major move of the stock. Because if you scan Mirza International 6 month performance, then you will miss the entire move of 4 to 5 months when it started from 70 level to 300 odd levels. So relative strength, here I am answering the period, and the holding period. Now, when you buy a stock, you already have decided your exit point, your stop loss level, where you are taking the entry. Now, what happens? Give the stock the time to react. Sometimes we call in technical analysis, the stock will break out and retrace. So we call it throwback basically, or maybe you can call it pullback. What happens? The stock will react, they will retrace, or they will pull back. Sometimes they will come near to your stop loss point. If you know how to place the stop loss, if it is hit, you are getting out without any question asked. But if you have a technical stop as per the charts, you have to wait patiently for. I usually wait for 2 weeks because I'm a swing trader, so I wait for 10 to 12 days maximum for the stock to react. If you are an investor, or maybe you're buying the stock for the first time, you're an investor or a positional trader, you must give the stock the time to react. Otherwise, it will result in over trading. You will see at the month end you have taken 80, 90 trades unnecessarily, and you will see that many stocks you have sold, and later on they came back near your stop loss. They never hit the stop loss. They made a move of 40, 50%, and you are not in that stock. So you don't have to do over trading. And sorry for missing out the second question. There was one middle part also of the question.
Yeah. So when you
Okay,
look
okay.
at charts, what
Mhm.
is your? Do you have a preferred time
Weekly and
frame?
daily, I always check. Always weekly and daily time frame. Like I said, if the stock is not viable on daily, then I will not check the weekly chart. I start with daily chart. If the stock is appearing to be viable, then only I will check the weekly chart and see where is it in a broader uptrend.
राइट राइट परफेक्ट सर सर जनरली आपने ये तो बताया सर ट्रेलिंग स्टॉप लॉस रहता है आपका डू यू हैव सो वो चार्ट बेसिस पे ही रहता है या उसमें भी कुछ आपका यू हैव अ विंडो कि ओके आई विल टेक दिस रिस्क इफ इट्स लाइक 10-15% में कि वहां पे सपोर्ट मिल रहा है उसको
Here actually I use moving averages a lot. So on my chart I use on daily chart 10 period, 20, 50 period, 200 period moving average. 200 is just for giving an idea of the uptrend. 10 period moving average I use because I have to trim my position quickly if the stock is breaching 10 period moving average. But I have seen many stronger stocks never breach their 20 MA also for a prolonged period of time. If you open the chart of Mazgaon Dock, you will get a pretty good example how strong the stock is actually, because the stock has nearly doubled without even coming close to the 20 MA. So now it depends on your stats. If you are a swing trader, now I'm assuming you're a short term trader or maybe a positional trader holding stocks for a few months, then it depends on your statistics. What is your average gain in the past trades you have taken? If your average gain is maybe 6, 7, or 8%, then definitely if the stock has moved up 20, 25, 30%, you have to protect at least your average gain, because now you do not want that stock which has made a move of 30% to give you a loss. So at least bring your stop loss to the break even, and then you ride the trend, you trail it. At max, you can lock in half of the positions, and then you can trail remaining positions with maybe some average, I mean, moving average. If you do not like moving average, then some swing low concept. There are many methods of trailing it. There are ATR based stops, like average to range based stops, which I do not use. Money stop, like you want to protect, let's say you want to get 18%, so stock is at 30%, you are placing your stop loss at 18% level. Or there is a swing low concept, or there is a moving average concept, or in some charts there are trend lines. So you know, like you open the chart of Narayan Hridale, there was a trend line for a very prolonged period of time, for 1 year. So now your stop loss will be that trend line, below that trend line. If the stock breaches it, you will be out. So there are many ways of placing the stop loss actually.
Right, right, perfect, sir. Okay, sir. एक interesting question is by San Baliga sir, and he has asked, how do you manage your positions ahead of quarterly earnings as the stocks react unpredictably?
There was one recent example of JK paper. If you buy a stock, you can buy a stock before earning, but in my point of view, you must have a profit cushion of at least 8 to 10%, because next day the stock may tank down if your position size is big. Now, see, if your position is only 3%, 4%, 5% size, then you need not worry about, because even if the stock tanks 10% next day, you lose 0.5% of your total portfolio. For me, if I am holding, let's say, 15% or 20% size, I will not risk that. If I do not have a profit cushion, I will not risk my money going into earnings. So I always have an idea where my stock, on which date it has pending earnings, and if the position size is big, and if I do not have a cushion, I will trim maybe 80%, 90% of the position. I may be holding only 20%, or sometimes I exit all of my shares, because I don't want risk. Rule based trading is this only, that you don't let your emotions come in between. If you have a cushion of, let's say, 10%, 15%, then at least I will have my stop loss at the break even. Now, only time I will lose is that if the stock directly gaps down below my buy point after even having a profit of 10%, which is very rare, very rare. So I like exited JK paper because of this reason. Because I mean, I exited, I think, at 413 or 14, because earnings were due. So this is how I managed during the earnings season.
Right, right. Thank you so much for sharing that, sir. So, sir, we are getting a lot of questions. Time, of course, बहुत ज़्यादा नहीं उतने सारे questions है कि cover ही शायद ना कर पाएं. We need audience help. Audience, इस space के comments में please जाइए. जो question, there are nearly 46 comments. Whichever questions you like, please go ahead and like them. I'll try to take up the questions with maximum likes first. सर आशीष सर का इन द मीन टाइम एक अच्छा इंटरेस्टिंग क्वेश्चन है. हाउ डू यू बाय, इज इट अ मैनुअल पंच और जीटीटी above the pivot point? Second part is, what happens if by closing there is a long wick? Do you still hold in such
I
cases?
hold in such cases. In long wick, I'm answering the second part. See, long wick, sometimes we are using candlestick chart. So we are too much focused on single individual candlestick. You pick up the book Japanese Candlestick by Sir Steve Nyson. In his book, he has mentioned multiple times that candlesticks are a short term, it's a short term pattern. You will never hear anyone saying, oh, there was a hammer formed in this chart, therefore the stock moved 100%. It doesn't happen. It just gives you the broad psychology. So if you open the chart of TVS Motor, when it gapped up around 910, 912 level on the chart, you will see a long wick. So you will be afraid that, oh, my stock made a long wick, and you will be exiting if you are opening the candlestick chart. That's the particular reason why I open the bar charts. So in that case, I will still hold my stock as long as it next day, or maybe in 1 or 2 days, again moves back up. And if the setup now coming to the first part, if the setup is very interesting, super interesting, everything is so good, then I will have GTT order placed in it. Otherwise, I will manually punch in, because at any day I have 4 to 5 setups in my watch list that are actionable. So if they are like yesterday, Gabriel or Tanfac, 2 days back, Gabriel, Tanfac, both were in actionable list. So now whichever sets up first, I usually buy that. That's how I go. Manually I go. If the setup is too interesting, too much everything is fine, then I will go in with GTT orders.
Right, right. Great. Thank you so much for that, sir. Okay. So next question, sir. एक question पे 4 likes we have got. MN Press वाला sir के question है. But how multi baggers can be caught if the setup is catch and released? That is target अगर profits book कर लेने हैं target achieve होने पे 20%. So
Sir,
वो कैसे आएंगे?
actually, I am a swing trader. That's what I am saying you. For your positional trading, your question is related to positional trading. See, when the market came out from COVID crash, you have to understand actually the market, how the market is reacting. Is the market right now coming out from a deep crash or a correction, or do you see value in stocks right now, or not, no value at all? Like when the market was coming from COVID crash, you check 23rd March 2020 was the bottom, 7600 level, 7611, and then you see Loris Lab the next month on 23rd April made a high. I bought at 135. That time the price was 675. Now the stock made a move of 500, 600% from that level. So you have to understand, if and I didn't even book even half share. Deepak Nitrite 575, Balaji Amine, Alkyl Amine, they were all making new highs immediately after the COVID crash. Now, when the market is coming from deep crash or correction, or this kind of situation, then only you will be getting these like 5x, 6x kind of name. I'm sorry, then only no. This time also, you see in Elecon, why am I booking half position? Because my size is 20%. If your size is 5%, 7%, you will not book even a single share. So Elecon moved from 170 level to 450 level now. Mirza from 70 to 350. FCL from 160 to 350. So you will find these setups in every market, like Mazgaon Dog, then Venus Pipe. There are many examples. So if your position size is controlled 5%, 8%, 10%, then you can hold on for a bigger move. But for me, if I am holding a position size of 20%, like I know my style, if I am holding 20%, the moment stock moves up maybe 20 to 30%, the position becomes too heavy for the portfolio. So I have to trim a little bit. So that's how I will ride the trend. So if your question is that how will you catch the multi-bagger, this question has underlying myth in the market also. Like, you think that you have to catch 100% move. This I discussed in a previous interview also. One stock that doubles up, you are holding 5% of that stock, it doubles up. You move your portfolio by 5%. Now, if you hold 25% size, you only need a 20% move to move your portfolio by 5%. I hope you are getting the mathematics. This is pure mathematics. If you are holding 5% position size, it doubles, you move the portfolio by 5%. But if you hold 25% size and it moves only 20%, you move the portfolio by same 5%. So it's a myth that you have to catch the multi-baggers, then only you will make wealth. See, I'm not forcing you to do short-term trading. I'm just giving you the perspective that both sides lead to the same destination.
Right, right. Perfect, sir. Okay, next likes के terms में सर राहुल सर का question था how to sieve core stocks from a list of 100 150 stocks. So I think we have already discussed that. So Rahul sir, we'll release a recording of this podcast immediately after it's over. You can maybe listen to it again. Okay सर, मल्टीपल क्वेश्चंस हम लोग के आ रहे हैं. धीरज सर का भी क्वेश्चन है एंड देन आई सॉ 2-3 मोर क्वेश्चंस कि जो लोग डेली जॉबर्स हैं, जिन लोगों के और भी हैं, something for them, what should they do? So one was ki what should, there are 3 questions. One is what should they do. There was another question that asked ki should they stick to maybe daily and weekly charts and do some small positional holdings, should that work for them? Third question related to this was mutual funds, are mutual funds really good for them because they charge 1% and is investing in stocks better that way?
Sir, for
So
working professionals, I always recommend weekly charts are better. Weekly charts always, and you can, I mean, if you have practiced enough on the charts, you can see sometimes on weekend you are scanning a stock. The breakout level was 100. Now the stock is sitting at 122. So you miss this opportunity. So you have to do your homework on weekends. Weekly charts you can analyze, but now you know that okay, this is the level which if crossed, I have to buy my share. So at least you can put up a GTT order, automatic buy order for maybe 50% shares or maybe 30% share, so that you don't miss out the entire move of the stock, and then you can pyramid up. Otherwise, there is no one method actually to trade them. But for weekly charts, you have to know your level, and then if you now these the technology is very advanced. You get your alert on your mobile. When I was working in government office, my boss was screaming every day. I usually get alerts on my mobile phone. I'm always buying and focused on my trading that time. So you get alerts in your mobile phone. Now you can buy manually. It hardly takes 10 seconds or 20 seconds to punch in the order. Because why I'm saying that sometimes the stock will break out on Monday or Tuesday or Wednesday. If you wait till Friday, you will miss 10-15% because there is a perfect time to buy a stock. This thing. So I mean this is very important weekly. So what was the second question? I missed that second question.
so
Mutual fund,
mutual
yeah, yeah,
funds,
correct.
is that a
It's a perfect thing to do for a passive investor. I mean, mutual funds. Even I also park some money in mutual funds always. So see, don't go by 1%. How will you avoid that? You do not want to work on your own. I am assuming you are a passive investor. Now you do not want to pay 1.5% for the commission also. Then how will you participate in the equity? So mutual fund is a good route, better route. You do your SIPs. If you do not like, you can go for index ETFs that has 0. I think 0.05 or 0.1% of your commission. That is further reduced. Now if you say it is even higher, then equity is not for you. So 0.1%, go with the ETF way. If you do not like, then mutual fund. There are many good mutual funds in the market. You can select two or three, diversify, maybe maximum two or three, and do continuous SIPs. Do not stop your SIP when the market tanks in. God forbid if the market crashes or there is a correction, deep correction, top up your SIPs, put in some lump sum amount. That's how you will generate alpha.
right? Right, perfect sir. Sir, so questions तो सर हमारे पास बहुत हैं. We have over 63 comments now, but of course batting आपको करनी है. मेरा काम आसान है, तो I would मतलब
Sure,
it's all
sure,
up
sir.
to you now, sir.
Sure, sir. Continue.
Okay. Okay, awesome, awesome. So next question, sir, Ashish sir ka hai, how do you avoid shakeouts? For example, HAL was showing tight consolidation. He took entry, but in the next 2 days it came down by 5-6%, and it was supposed to announce earnings. So he spelled something fishy and then was shaken out. But then results अच्छे थे, and then HAL went up
Sir,
again. So shakeouts
sir,
को आप कैसे deal
actually,
करते
I
हो?
have to understand, like, whosoever has asked the question, I have to understand what does he mean, where is his actually stop loss, where is he buying, where is his stop loss in the chart. I can share one example with you, 980, 990 level. You open the chart of Coromandel International, my stop loss was 945. I shared on Twitter. Stock went down immediately after I bought. It it went up again from 946. So I was saved by 1 rupee. You have to be patient. Now it depends where your stop loss is. If you do not know the correct placement of the stop loss, because the stop loss has a significance in technical analysis, it is an area below which the trend is not so healthy now as earlier you thought. Now I can share plenty of examples. You open the chart of tube investment. Unfortunately, it has gone down, but the stop loss many weeks, 2-3 weeks before, the stop loss would have been 2595. The stock made a low of 2595.25. So there are certain areas you cannot put a random stop loss. Now I'm assuming now you have learned where to place the stop loss. Now if you get shaken out, you have to get out, no question asked, because that was your stop loss. Now if the stock sets up again, it's a very strong setup now, stronger than before, because it has shaken out even the weak hands. So I will be definitely looking to re-enter again. Sometimes it happens, we also get shaken out in 1 or 2 or 3 times in a single trade, and then we enter again if the stock sets up again. Basically that makes the setup more stronger, as he is mentioning HAL. So now you have seen what shakeouts do. They usually make the setup much better. So there is no, I mean, people feel shy to buy back the stock. I mean, they have everything in their control. Sometimes they sell the stock on a single day. They say that, okay, it is setting up again in after 2, 3, 4 days. They do not buy. Often they delete the stock from the watch list after they are shaken out. Do not delete it. Sometime it may set up again. It will give you another opportunity.
Right, right, perfect sir. Okay, next sir, दो तीन questions हैं, विजय परमार sir का है, अनिर्बन sir का है. They have asked how do they join or follow you, and how do they learn from you? So one is of course your tweets. Are there any other ways as well
Sir,
to follow you or
multiple
learn
times
from
I've
you?
said like this in my tweet also. If you want to learn, there are many books. There are books in my pinned tweet. And secondly, my tweets are enough for you to protect your money. So other than that, I sometimes only I take some batches. Like last was in August. I am not taking focusing only on my trading now. So if I have something, I will announce. But other than that, I am still saying you books are enough in my pinned tweet. And my tweets, if you go through them, you will get a fair bit of idea. Not fair bit. There are 13,000 tweets I have made in 2 years, not even 2 years. So you will get enough things about false breakout, climax tops, climax bottom, uptrending stock, role played by key moving averages. There are many things I have shared, so you can learn definitely through that also.
Right sir. Okay. So another question was Raj Sarka. Besides swing trade, how do you set up your position and investment decisions? I think we have kind of taken that up already. Then okay. So Vaibhav Singh sir का question है, how do you view upward channel resistances? Often stocks break out, but
So
are they
to be
reliable?
very honest, I just keep on trailing my stop loss because uh, multiple examples I have seen, they work, sometimes they do not work. I know where this question is coming from. Basically, one foreign author has written in his book that whenever a stock breaks out from the upward channel, you have to sell it. Now what happens, I can share plenty of example. Tata Elxsi was one chart. If you open the chart, there was a broadening wedge pattern around 1400, 1500 level, it broke out. If you are reading the book and not applying the practical experience in here, you will be forced to sell the stock. The stock moved from 1500 to 10,000. It moved up almost 6, 7 times from that level. So if you are following that channel concept, you may lose on some money. So what happens? Just keep on trailing your stock till it goes. See, okay, I'm taking you to that picture of the channel. Okay, let's say the stock reach near the resistance. Now what will you do? You have options. Now what will stock do? Just imagine, either the stock falls back and hits your stop loss, you are out. Second thing stock can do is stock can consolidate sideways. While the stock is consolidating sideways, the upper boundary of the channel will move up. What will happen now if this stock again for the next time breaks out? The channel is still 50, 60 points away for a 400 rupee stock. What will you do in this case? Now you have sold the stock because someone told you that at the channel resistance you have to sell. So you didn't wait for your stop loss, you didn't wait for your trailing stop loss to be hit. Stock moved sideways. Let's say I take the example of IFL Finance. It is in a channel, upward channel now. Let's say the stock consolidates on the right hand side. It moves right hand side for 1 month or 2 months. Meanwhile, the channel resistance is moving up, sloping up, 30-degree angle. Now the stock starts moving sideways from 440 level. Channel resistance is also 440. Meanwhile, the stock moves for 1 month horizontally till 440. The channel resistance moved to 480. Now the stock breaks out again. It makes a move of further 15 to 20%. In this case, you already sold the stock because you were following this concept. So just keep on trailing the stop loss. Nobody knows anything. Where will the stock go? You can never see. See, you just have to trail the stock. Just trail it till it goes. Mhm. Yeah.
Right, right, perfect sir. I think similar thing happened recently in Mirza International as well. But yeah,
Correct, correct, sir. Mhm.
okay. Okay. Next sir, Vinayak sir का question था, in momentum trading, how do you keep stop loss on trigger basis or
I
closing
play stop
basis?
loss on trigger basis. And what happens usually, if I am sitting at a huge profit on my 50% of the position that I am freely holding, I am still having trigger basis stop loss, but let's say my actual stop loss should have been 95. So my trigger is set at 88 or 90, so that I am still observing. I hope you got my point. Stock is, let's say, at 130. My stop loss should have been 120. My trigger is at 114. So I am still observing how the stock reacts till 120, but I am ready to give extra 6 or 5 points if the stock falls down quickly. But always I have, like, I don't understand why what, closing basis stop loss works. Fine, it works, but at least you should have a profit cushion for that. Without a profit cushion, if you are using closing basis stop loss, your stock may end up deeper by 3:30 p.m. So you may make a big loss also. You cannot experiment this with a big position size. Never use a closing basis stop loss with a big position size. If your position size is 3%, 5%, 6%, it is still okay to use closing basis. Otherwise, always have stop loss in the system.
Right, right. Great, sir. Next, sir, Ankur sir ka question was around stop loss strategy. Kranti sir ka question was around moving averages, which we have already discussed. Kranti sir, Ankur sir, we'll be releasing a recording of this podcast right after it's over. Please do listen to it. Uh, okay, Amit sir ka mutual funds wala question we have taken up. Okay, so PK sir ka question is, sir, feed your winners and book your partial profits. These statements are contradicting. So what your so this is an interesting point of view which we have kind of discussed, but still,
Which one? Sorry, I didn't get the.
feed your winners. So feed your winners as in pyramiding up versus
Okay,
booking
okay,
partial
okay, okay.
profits.
Uh, See, sir, again, I'm saying there are investment styles, swing trading, then there is positional trading. In positional trading, you just hold on to your stock till it is moving up. You have maybe some moving average as your criteria to ride the trend. In that case, what happens, let's say you started with 10% position size when it broke out for the first time. You have ample capital. On the second breakout, you will add some 5 6% more. That is pyramiding up, and you hold on to your winners. Now in swing trading, I can't apply the same concept because the whole essence is to churn up the capital faster. That's what I answered before also. 100% move, or 5 20% move, or 10% moves. You can do the mathematics. The essence of swing trading is in churning the capital. It's a low margin business, but it's your inventory keeps on rotating. That's the businesses. So uh, so in swing trading, if you are starting with the big position size initially, maybe 12 and a half or 25, that's what you do. Where will you pyramid up? There is no scope to pyramid up because you are fully bloated. Now you have eaten the complete dinner in within 15 20 minutes. Now you are bloated enough. You can't eat more. But in positional trading or in investment, you start slow. You first see that, okay, if the stock and the business is performing as per my expectation, then you start pyramiding up. So that's how you hold on to your winners. See, in investment, you are holding 10 12% size. In swing trading also, if you are booking half position, now your half position is 10 12%. I am on the same track as you. So I hope you are getting my point. What do I mean by that? And the third
Right.
aspect to it is that if your stock becomes mad, that's what I call as the climax move. I have to book my position. I mean, even you should book your position if there is a climax move. Your stock moved up 60, 70, 80% in just 1 or 2 weeks. What happened in IRCTC, DMART, IEX? There are plenty of examples where you have climax move, climax stop. So in that case, you have to at least cut your positions that time. So I cannot pyramid up even if it is going up. So in this case, I will be getting out.
Right, right. Okay, so next question is very interesting. I also want to know this answer. Mohammed Sadi sir ka question hai, I bought GRSE, Mazda, Ambuja at 400 ELGI equipment, but I'm not good at selling. What should I do? So exit strategy जो मतलब लोग अक्सर miss कर देते हैं. So one is of course again this also relates to swing versus positional targets वाला. But for general people like again I want to know this from the perspective of not maybe not full time traders जो कि थोड़ा बहुत current trading?
So if you're asking about the positional trading, it is very simple. Open the weekly chart and just trail with the 40 period moving average on the weekly chart. That I discussed with in one interview also previously with SOIC. What happens usually, we trail it with 40 MA on weekly charts. You can read a book by Sir Stan Weinstein. He has described this strategy in detail for the positional trader. That's how I was riding the stock, Loris Lab and Deepak Nitrite and other stocks. But the disadvantage is in this strategy is you have to give back your profit from the top. You cannot sell exactly near the top. If the stock is peacefully moving up, it goes to sideways consolidation and breaks down. You have to give back some portion of your profit back to the market. This is the disadvantage, only disadvantage in this strategy. So that's how you sell. Maybe uh, if you start your position with 10%, 12%, just keep on riding the trend on weekly chart using 40 period moving average. If you are a swing trader, it depends on your statistics now. It depends on your what is your average gain in all of your trades which you have made in the past, and your average gain will decide where you have to exit. If your average gain is 5%, stock makes a move of 15%, I have to protect my average gain. Maybe double of it I have to protect it. So that's how I we exit in there. And then you can maybe freely hold the rest, and or maybe you can book all your position and move on to the next trade.
Right, right. Perfect, sir. Sir, this is an interesting question, Jinesh Sarka. He wants to know what is the fundamental logic that makes technical analysis work. For example, why does a stock skyrocket upside once it crosses the resistance? He is requesting if it would be great if you can throw some light on the logical side.
There is a book written by Sir Mark Andrew Lim, The Handbook of Technical Analysis. I mean, chapter number 25 is Investor Psychology. If you read the chapter, it has three sections in it. So, why I am referring to that particular chapter, because your question is perfectly answered in this chapter, chapter 25, Investor Psychology by Sir Mark Andrew Lim. What happens usually, there are bunch of traders placing their orders in a range. See, when a stock is, let's say, in a range of 90 to 100 horizontally, now there are range traders in it. Now I know this stock is in a range. Maybe I will buy around at 90 level to sell it near 98 or 99. Then there are some shorters here who they will go short when the stock reaches near the resistance. And there are third category of players, those who are accumulating the stock for the breakout level. So there are bunch of traders playing in here, and there are biases in the market. I can share multiple biases, like, okay, just to give you an example, in 1978, Sir Daniel Kahneman and Amos Tversky wrote a theory, prospect theory. You must read that document. He was awarded the Nobel Prize with Sir Harry Markowitz, who wrote his separate theory in 1954. What happens? There are many biases playing out: sunk cost bias, anchoring bias, many biases. For instance, anchoring bias says that suppose a stock breaks out at 100. Now you will be thinking that, okay, let's say you miss the stock, it moved till 110. Now you are sitting, you have an anchor of 100 in your mind. So the stock pulls back again. When it comes near 102, 101 level, you have an anchor of 100 in your brain, even though it has nothing to do. Stock has nothing to do with your anchor. This is a bias in your brain. You wait for your stock to come and you buy immediately there. So there are bunch of orders from these traders having anchoring bias at this level. So if the stock moves up, like I'm asking you, you may have observed that sometimes the stock moves to 130, 130. They still get the second opportunity, but many traders never buy it again because they have an anchor of 100. They say, oh, when my price will come, I will buy. So now this is the textbook answer. If I come with my experience and what Sir Richard Dimilvikoff wrote in 1932, Method of Tape Reading, there are only two categories of player in the market: informed insiders and the poor retail investor. What happens usually, I'm deliberately using this word, what happens is that informed insiders have all the information in advance. They know everything about the upcoming news 2 to 3 months before. So they will start their accumulation. This is what Sir Richard Dimilvikoff beautifully explained in his book, how this is done. And once the news is out to the public, they have accumulated enough shares, and on the last day, they just have to punch in the final order, and that's how they accumulate, and the stock breaks out violently. If the stock doesn't breaks out violently with good volume, that is an alert sign for you. I have shared hundreds of tweets on false breakout. So that time they have dumped the shares to you. It's a false breakout. You have to get out. So that's how, I mean, accumulation is done. That is why the breakouts and the stock moves up too quickly from the breakout level, because this is the buying by an informed insider in there.
Right, right, perfect, sir. Okay. ऑलराइट लेट्स सो काफी सारे क्वेश्चंस मेरे को दिख रहे हैं जो हम लोगों ने जो आपकी स्ट्रैटेजीज के अराउंड एंड स्टॉप लॉस एंड इन सब के अराउंड है सो ऑडियंस जो भी लोग लेट आए हैं प्लीज डू लिसन टू द रिकॉर्डिंग व्हिच विल बी रिलीज आफ्टर दिस पॉडकास्ट यू विल गेट योर आंसर्स देयर इफ आई एम नॉट एबल टू कवर देम. Okay, so this is an interesting question, sir. Praveen sir, ka there are different technicals like inverse cup handle, horizontal breakout, and a few others. According to your experience, which one has a higher probability of breakout and breakdown?
Sir, there are basically four categories of chart pattern: head and shoulder, triangle, rectangle, and cup and handle. Only four. Why am I saying only four? Because rectangle, you can club double top, double bottom, triple bottom in rectangle pattern. Similarly, cup and handle, cup without handle is a saucer pattern. Similarly, triangle has inverted triangle, symmetrical triangle, ascending, descending, broadening wedge, pennant pattern. Similarly, rectangle can be clubbed, flag pattern can be clubbed under rectangle. So there are only four categories: head and shoulder, triangle, rectangle, and cup and handle. Now, if you observe it very carefully, head and shoulder, cup and handle, and this rectangle, all three have horizontal boundaries. So always I teach people, make it very simple. Do not go into these fancy terminologies. If you can draw a simple horizontal lines and react on that line, you will be doing much, much, much better. Do not fall into the trap. If you do not want to understand, don't understand. Just draw a horizontal line. All three patterns have horizontal lines. Only difficult pattern is to trade is triangle pattern, because if you ask me, ascending and descending triangle also has horizontal line. The only problem comes in the symmetrical triangle, because it has so many intra bar penetrations, intraday penetrations. You will think it is a breakout, but in the same day it comes down. So the most difficult pattern, if you ask me to trade, is symmetrical triangle or any pattern that has diagonal boundary, too steep boundary. That is difficult to trade. Otherwise, all other patterns have horizontal lines, so it is very easy for to trade for a beginner. That's how I multiplied my capital many fold when I was trading, because I was only checking the horizontal line. Only when I started trading in technical analysis, I learned. So horizontal line will cover all the chart patterns in this. So very easy to trade. But the most powerful chart pattern I have found is cup and handle pattern, because it gives you clear indication of shifting of stocks from weak hands to strong hands, and when it breaks out, it's usually a very powerful chart pattern.
राइट सर. सर काफ़ी सारे क्वेश्चंस बुक्स के अराउंड थे सो आपकी प्रोफाइल पे एक ट्वीट पुट पिन रहती है बुक रिकमेंडेशंस की सो फॉर द पीपल हु आर आस्किंग फॉर बुक्स एंड हाउ टू गो अबाउट इट दिस ट्वीट इज पिन्ड ऑन दिस स्पेस एज वेल आई हैव जस्ट पिन्ड इट एंड अदरवाइज आप चार्टर सर की प्रोफाइल पे जाके भी जो ट्वीट पिन्ड है उसमें आप देख सकते हो कौन कौन सी बुक्स उन्होंने रिकमेंड करी हुई हैं. ओके सर नेक्स्ट स्वराज कुमार सर का क्वेश्चन था हाउ टू अंडरस्टैंड इफ अ स्टॉक इज गोइंग इन एक्यूमुलेशन और डिस्ट्रीब्यूशन टेक्निकली.
Sir, this question has a deep answer. Basically, accumulation and distribution will be visible through the volume markers below the chart. In accumulation, you will be seeing that when the stock price is closing near the high, I mean, you have to combine the price with the volume. If price is closing near the highs and the volume is also very good, that is usually a sign of someone entering a stock. I will share one example with you, GHCL. If you open the chart, I issued a warning that time that this stock is not healthy at all. Because if you see, the price was not closing near the high and the volume was very high. So you have to combine. There are different combinations in the base formation. It was very near to the high, near 700 level. So people were gung ho about the breakout coming up in GHCL. That's what I am saying, that if price moves up, the bar moves up, but the price closes near the lows and the volume is high, this is a very negative sign. You have to see when the volume is high, the price should close near the high. That is the sign of accumulation. And when the price comes down, that time the volume should be very, very less. And just look at the broader uptrend, 200 MA, 200 period moving average. If it is sloping up and the stock is consolidating, now you can easily identify accumulation on this chart. The price will be closing near the high, volume will be up, and when it comes down, the volume will be very less, and that's how you understand the accumulation. Opposite for distribution, opposite for this. That's how I opened the short position in SBI cards much before also, and now second time again also, because you open the chart of SBI cards, the stock is closing near the lows, volume is very high. So at least you have a fair bit of idea that there is no strong buyer sitting here. Nobody is coming to save this stock. So otherwise it's a game of probability. You always have a stop loss, but your analysis will say that, okay, this is accumulation or distribution. So combining price and volume together will give you an idea of it.
Right, right. वेल थैंक यू सो मच सर, पहले तो इतने 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 सारे क्वेश्चंस हम लोगों के आंसर करने के लिए, एंड हमारी ऑडियंस के लिए भी. ऑफ कोर्स ऑल ग्रेट थिंग्स डू हैव, मतलब कभी ना कभी तो, एक जैसे आप स्विंग ट्रेड करते हो तो फिर आई थिंक कभी तो एग्जिट लेना ही पड़ता है. बट सर, बिफोर वी क्लोज आई हैव टू रिक्वेस्ट. वन इज, प्लीज डू अलाउ अस टू होस्ट यू अगेन
Definitely,
समटाइम
sir. Definitely.
and
My
learn
pleasure.
more from.
Actually, I love teaching. That's why I joined Twitter. So, anytime, anytime.
Yeah, matlab ek session was definitely not enough, and so we would love to hear from you again, sir. And second is, before we part, one maybe final advice that you would like to, or one parting thought that you would like to leave the audience with
The
us
basic
tonight.
thing is the risk management. When you, I always say when I teach also, when you construct a house, you have to get the fire clearance first before constructing a building. So it's your hard-earned money. Always have stop loss in the system or some sort of risk management if you are not having stop losses, because once you get a drawdown, if you lose 20% of your capital, it will be very difficult for you to break even. So a lot of people say it's okay, fine. I mean, we don't use stop loss, but I have seen many, many people. I daily receive many messages. Sir, I lost 40% of capital. Now what to do? For someone who lost 40, 30% of their capital, they know the meaning of risk management. You are not there at their place. So manage your risk. And after that, you hold on to your winners. Like I said, like in positional trading, just keep on pyramiding up. If your size is good, increase your size, maybe 10%, 15% maximum till there. If you are a swing trader, I already explained how to size it. So risk management is the key in here. Do not lose money, and do not have a deep drawdown. So preserve your capital and have your stop loss in the system, because that's how you will be avoiding the bear markets or crashes or correction. And be patient. Wait for your stock selection, stock setup to your stock to set up, and then only you have to buy. You do not have to have FOMO, because if you have FOMO and buying stocks on recommendations or someone ABC tweeted a stock X, you are running to buy that stock X, you will eventually lose money because that person has his or her own research, but you do not know whether to hold this stock or not. So do not have any FOMO. Focus on the learning process first, and secondly on the risk management.
Right. Thank you so much again, sir, for taking out time for us and imparting so much wealth
Thank
of
you.
knowledge, sir. I really
Thank
can't
you
thank
very
you enough.
much. Thank you. Thanks to all for giving me the opportunity to bear with me for 1 hour. Thanks a lot. My pleasure.